Hey everyone, Chris Urso here with URS Capital Partners. I wanted to take just a couple of minutes and really share how we think about our investors, and especially when it comes to distributions and reporting. This is something, since day one back in 2008 when we started URS Capital Partners, we had a very, very simple core value when it came to our investors. We will never ever want an investor to wake up one day and wonder what's going on with your investment with URS Capital Partners. And since our very first deal, 16 years later, we've never missed a quarterly update. We've never not gotten back to an investor. And trust me when I tell you this, 30 plus deals later and 6,000 plus apartments, not every deal goes smoothly. And we show up to those calls, we answer emails, we respond to questions. And I could tell you, we get a lot of feedback or input sometimes from other owners or investors in the space. And when we tell them we have about 300 investors and they say, oh my gosh, it must be, crazy. And honestly, it isn't. And it's a big testament to Rebecca Windsor at our team, who heads up our investor relations. It's been with us for 13 years. And Chris Gorman and the entire team, Maria Meyer especially, has been with us for 16 years. But more importantly, we put together a system from the onset that we've never swayed from. We've only tried to improve, month over month, quarter over quarter, and year over year for our investor experience. And on the reporting side, what you can expect is on any deal that, once you're onboarded, and you go through the process with Rebecca, once you're onboarded and you make an investment into a project, you're going to get a monthly update for the first year on every deal that we take over. That kind of just gives you a summary of the progress. And in addition to that, you'll get a detailed quarterly update. You'll often get photos attached to it, drone videos attached to it, all in an effort to never have you wondering what might be going on with your investment. In addition to that, from a distribution perspective, I can tell you most of our investors that have been with us for a long time now understand and know that we're opportunistic investors. So we're not typically buying the prettiest, cleanest deals from day one. So a lot of our deals that we acquire need some form of reposition or operational physical improvement. And we typically like to give ourselves the first 12 to 18 months, depending on the depth of that reposition. So, many deals will have no distributions for the first 12 months. And that's because we don't want to start sucking the property dry from the onset. We need time to go in there and execute and implement our business plan. It doesn't mean the property is not going to be making cash flow during that time. And then there's other assets that we're going to acquire, and within the first 3 to 6 months, we'll begin distributions because, the property is stabilizing and we're getting incremental improvements. We're able to step in and play offense day one versus have to cure a lot of defensive items. But additionally, on the distribution side, I think it's important to understand that, we really look to distribute sustainably, not aggressively, I think is the key. We don't like to cash starve our properties. We put aside ample reserves on the deals that we acquire up front. We hold ample reserves throughout the life of the deal. We tend to be willing to sacrifice, a little bit of return on paper for longevity in the form of cash reserves. And especially even after a refinance, we'll kind of replenish and do a forward look for 5 years of capital improvements that we believe we'll need to make to the asset. But it's important to understand that we're more total return driven than looking to, pull every last dollar out of a property, especially in an environment like this when you're in a normalizing kind of part of the cycle and a reset. I think that's what allowed us to keep moving forward across our portfolio, and both on the deals that we had moving into the cycle and the deals that we've acquired since the beginning of this reset in 2024 when we started acquiring again. Every one of those deals, every one of our deals have north of 7 figures set aside inside them. And that's deals that are even beyond our initial reposition plan. And it's not that we're irresponsibly holding capital. Once we get into a rhythm where 2-3 years into a deal, we'll start to kind of look at those cash reserves and reforecast out for the next 5 years. But we always go into our deals with the mindset that we're going to own these deals for 5 to 10 years. Yes, our average hold time has been, 48 months, give or take, 40-ish months on the 23 deals that we've sold. But we go into everything with the mindset of, hey, if we're going to own this deal for 5 to 10 years, we want to make sure that we're capitalized appropriately to do so. Also on the investor side, we utilize Juniper Square. We have a great investor portal. You have access to all your tax documents. All your distributions are done via ACH. We really pride ourselves. Rebecca, Maria, and Tom work really hard to get all of our K1s out by April 1st. I think in 16 years, we've maybe put one property on an extension out of the 34, 35 deals that we've done. And that was just 1 year that we did that. But we really strive to get all of our K1s out on time. You have access to that portal from anywhere. And I think I touched on it, but distributions are done via ACH. You're able to fund your investment via ACH and wire, obviously. But our investors are our lifeline, and we've always had an institutional mindset when it comes to our investors. We're an entrepreneurial company for sure, but we really pride ourselves on an institutional mindset when it comes to our investors, it comes to our reporting. If you've never seen one of our portfolio-wide quarterly updates, I encourage you to do that. Go to YouTube or check us out on LinkedIn. Follow me on LinkedIn. We put them out there every quarter for the public to see. I don't know of anybody else in the private capital space that puts out their entire operating KPIs to the public, and we take a lot of pride in that. And we don't hide anything. I think it's easy to show up when things are going great. I think it's more important to show up when things are not going that great. And trust me, I've gotten on quarterly update calls for years on a deal that we bought, our first 100 unit, that didn't go so great. And I got on a quarterly update every single quarter for 4 years, and we put every resource we could, into that deal up through the day of closing and sale on it. And I think we generated about an 8% IRR on that deal. But we take more pride in those deals than the ones where we generate a 50, 60 IRR at times. And I think that's how we've been fortunate enough to build our investor base to be as sustainable as it is today. And we're very, very proud of that. And we're very proud of the relationships and the people that we've been able to get to know over the years that have become our investors, which we call our partners in our office, to be quite candid, because you're much more than an investor. We're looking for long-term, meaningful relationships. So I hope this gives you a little bit of insight into, what it's like to be an investor with URS Capital Partners, or more importantly, a partner with URS Capital Partners. And I look forward to talking to you soon. Thank you.